Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today I'm just taking a look at Tesla, the chart which is just going down before my very eyes. I think that the market was struggling this week because of the, price action of Tesla on the charts. It's just been dragging down the tech sector, which this is no small retrace. That's a very powerful move down and kind of gets rid of the concept of any possible bullishness for the tech sector, which of course influences Bitcoin and crypto. If I go ahead and put some of these lines on there, we're very likely to come down further, and I'm not sure what's really going to save Tesla. If we go ahead and just look at my deeper trend down here, this is actually established by the weekly EMA, which could suggest as low as $500 or so for Tesla, which could in fact harm the market quite a bit, assuming that it eventually drops here. And it's not looking great, but it does have some support below, so we'll see. As for the rest of the stock market, let's go ahead and look at the NAS 100, my reference of choice as an index to see what might influence Bitcoin's behavior. You do see that we did have a bit of a recovery here from the drop the other day, and we're trying to reclaim these levels. But so far, let's just zoom in a little bit. So far, it looks like we might be getting a rejection, although it is still early in the day. That doesn't look very good. Yeah, so let's just pay attention to stocks because it can severely influence Bitcoin's price. And if we just to zoom out, I do think that, these stocks can actually drop another 15 to 20% to their 200 EMAs, which for Bitcoin would be magnified by 2, a factor of 2. So Bitcoin could drop as much as like 30 to 40% more, which would be quite disastrous for crypto, as many altcoins in turn would drop a multiple of Bitcoin. So that's just, you know, just would be catastrophic for crypto. Let's just put it that way. Okay, and as this stock market recovers, it could be a slow process. It could be kind of one of those lost decade scenarios. It could be one of those, very difficult periods for volatile assets. However, we are making an effort to try to recover that ground, and we did get a nice bounce. So let's go ahead and turn off the EMAs. Let's try to get to the 4 hour perhaps, just so that we can overlay Bitcoin on top of this stock market. So Bitcoin here is in teal, and the stock market is dropping, but Bitcoin hasn't dropped yet. It is following the price action of the stock market almost perfectly, right? In some places, you may need to stretch it out, but you can see the price action. Again, Bitcoin is teal, and the candles are the stock market. And depending on how you stretch out the charts, you can see that the price action fits almost identically. So is Bitcoin about to drop? Let's go ahead and just jump over to the Bitcoin chart. And yeah, we do see Bitcoin is dropping as well. Okay, oh, there we go. Its chart's starting to turn down. So let me turn off that teal one because I don't need that one. We're looking at the actual Bitcoin chart right now. And we are seeing that drop. There is this kind of engulfing candle on the 4 hour. And perhaps this bullish divergence has played out, and now we have this hidden bearish divergence, which may also play out. We seem to be witnessing that in action. We did have this rising wedge for the majority of the price action this year. And that rising wedge, well, some people were saying it was just, an accumulation wedge, an accumulation triangle, but as I mentioned in a previous video, I wasn't quite sure. But as we've broken down from it, it was clearly a rising wedge, which broke bearishly, as they tend to do. And now we're putting in another pattern, which of course I could just play with this a bit more, but we are seeing a bit of a falling wedge this time, not a rising wedge, but a falling wedge. And perhaps I could stretch this one out just a little bit. Just get rid of this. And that doesn't really make it look perfect either. So I'm not sure exactly how this is going to play out, but these things tend to break to the upside. So if you wanted some hopium, these falling wedges tend to break up. We still have our death cross on the horizon, which of course, this is basically the 3-day 50 and the 3-day 200, where they kind of converge. In that area, there is price action that can be squeezed to the downside. So if I put on the 3-day, and we put on the EMAs, yep, price action just keeps moving down there. These 50s and 89s, they just keep pushing us down. And then the 200 EMA and the 200 MA are supporting us. We are now under the 200 MA, which is not good. Okay, you don't want to be under the 200 MA. That's kind of bad news. But we're still above the 200 EMA, which I guess that's something. This is the 3-day chart, and you can, give it what significance you want. But the last time that this happened, you can see we had a devastating fall. And I don't know if you noticed it, but we just breached this area on that relative position. So this is how close we could potentially be to a squeeze to the downside. And some people have been running with this idea and talking about other EMAs. It's not really necessary. They all basically have the same kind of consequences. You can talk about, this 50 crossing, that 50, or you can talk about, whatever, the 20 and the 89, what have you. But the key point is that if you throw on the 3-day and you just take a look at where the 200 EMA and the 50 EMA, where they're pointing to, that general area, that's where we're getting squeezed, and it squeezes to the downside. Of course, there are lots of crossovers. Some of them are earlier than others. Some of them are a bit late. And, there are some heads up that you could have gotten. For example, on the 3-day, we have the 50 and the 89 MA crossing right here. Look how that got rejected. You can just find these different patterns in the EMAs and the MAs. So it's always a good thing to take a look at them. But the key point is that you back test it, and The EMAs have different numbers on different time levels, and they appear in different areas. So again, like here, if I put on the weekly, you can see we're being supported by the 89. But on the 3-day, we're being supported by the 200. And that's just because, they work in multiples of each other on different timelines. So whether we say it's, you know, the 10 or the 89 or the 20 or the blah blah blah, it doesn't matter. You just pick a time frame and figure out where they're converging and kind of have an idea of how price action moves in those areas in order to prepare you for what might be coming up. I think Crypto Crew uses 3-day, just like I do, and so this is what I'm going to stick with for now. The reason I like this is because I can see when we've broken under the 200 MA. And that's not something that you're going to hear from anyone else. But that's particularly why I chose this time frame to use, is that you can see that we are breaking underneath the 200 MA. And that was the heads up in this previous dump. Like, you know, prepare yourself, guys. Like, be prepared, have your risk management in order. If we're gonna go down in the next couple weeks, then you're gonna want to have your heads on straight, and you're gonna want to have your stop losses in place. We are gonna have potentially some fake out bullish maneuvers here, but look at this chart. This is not a bullish chart. People are talking very bullishly. This is not a bullish chart, okay? Although we have the potential to break up, if we get limited underneath like 42,500, if we get limited under 41,000, or if we just can't break this wedge, and maybe we're even limited here at like 40,000, then, we're in a very dangerous spot, right? Because we can potentially just go sideways and then eventually get squeezed down the closer we get to the apex of this triangle. And it doesn't have to happen. There could be the squeeze play to the upside in terms of, a short squeeze. And if that's so, then perhaps we can reclaim some of these levels, but we haven't been doing it. We haven't been doing it, and so we are highly at risk. And with the stock market behaving as it is doing, it just becomes, less and less likely that we're going to escape this this death cross. All right. So let's see. I put the fractal on from 2018 when they had their death cross, and this is the price action that they had. Looks very familiar, doesn't it? Go ahead and turn off that falling wedge. Looks very familiar to our current price action. And if you see us not going above that midline, which I've had marked out for quite a while, if you see us not going above that midline, then potentially we're being squeezed to the downside. And some of these like fake outs to the upside, they might get you super bullish because, we've just been against the floor for so long that you guys like want to just have a bull run. But pay attention to the dotted line. Pay attention to the upper limit. And if we don't break those things, we're still in the squeeze. Of course, this pattern is kind of a modified pattern of the wedge that I originally had. It's funny, I made this other wedge way before I hypothesized the death cross just by analyzing EMAs on multiple time levels and doing backtesting. I made this one and I said like this was going to be a critical thing. And look how closely, again, you guys remember, we were back here and I was hypothesizing this triangle. And, look how closely it matches the actual death cross from backtesting, right? So this is based on hard data sets, whereas this was just out of my imagination and that at the apex something critical could be forming. So it's quite interesting. Tells me I'm on the right track. Maybe I don't have all the consistency of step by step, crossing the T's and dotting the I's to make a strategy out of these ways of thinking. But the creativity that I'm putting into these type of analyses are working out, and they're leading me to correct conclusions. And the correct conclusion right now is that we are highly, highly at risk. I can't underscore that enough. We are very quickly approaching the apex of this convergence and possibly a massive dump. Again, it doesn't have to be our fate. I just want everybody who's part of the Alpha fam, you know, who's, part of any, group that I've been part of, just to protect themselves. That's all. Just protect themselves. Maybe take a little bit off the table. It's okay if you buy back a little bit higher if we end up breaking this wedge, but don't be inside this wedge or at the bottom of this wedge with no stop losses or in very low liquidity markets where even if you try to sell, there's not enough buyers, right? Don't be in coins that don't have high liquidity, because when you try to sell, you're going to be selling for the absolute worst prices. There's just not going to be enough buyers. And so the prices you get are going to be extremely bad if you're able to sell at all. Some exchanges, if we do have a breakdown like this, some exchanges do go offline. I don't know why. Some people suggest that it's kind of a scandal type thing. Other people say it's just the high volume while everyone's freaking out. But somehow the big VIPs, they always manage to get their transactions through. The billionaires and the big players, they always get their transactions through. But the site is down for the retail guys. So if you don't have your plan in place, if you don't have everything organized right now, just I'm giving you a warning. Like, bad stuff happens on days like these, and this isn't perfect, right? This could be a totally different timeline than what you're looking at right here. It could be earlier, it could be later. This is just a fractal. The squeeze is what matters, and then also the market conditions, which is why I was showing you the stock market. I'm being dead serious here because I want you guys to be prepared. I've been talking about this for months. While everyone else was being a moon boy, I've been always keeping this option on the table and building up the theory and doing as much as I could to show you what type of support we have, how we're hitting our fibs, and what kind of resistance we might run into, right? We ran into resistance here, here, here. Just got totally rejected from this zone. Showing you my fib channels, right? We're bouncing down, bouncing down, bouncing down, bouncing down. Getting rejected. Are we going to reject here and just kind of fake out above it? And then also putting in macro theory, right? Because there should also be hope for this market. It just may take a while. We may dump, and then it may take a while to recover. That's all. Buy in low, right? And then just ride it up. I'm not saying that my macro theory is correct. I'm not saying this fractal will play out absolutely. I'm not saying that this death cross is fate. I'm just saying, so far it's been pretty accurate, and it's highly possible. I'm willing to be bullish also. Okay, if this market turn flips bullish, I'm willing to be bullish. But I'm not going to be suckered in by these teeny tiny moves, right? Because this is the scale that I'm looking at. This is the scale that I'm looking at. And somebody who just gets extremely bullish because of this little teeny tiny candle, I mean, you can't control your emotions. Like, if that's you, you can't control your emotions. Don't get super excited about this teeny tiny candle. Okay? There's a lot bigger moves on this chart than just that teeny tiny candle. If that teeny tiny candle made you think you missed out on something, no, not even close. Not even close. Those bounces are designed to trap you. All right? There's a reason why we're dropping hard right here. There's a reason why we dropped hard right here. Reason why we dropped hard right here. Dropped hard right here. Dropped hard right here. Dropped hard right here. After they got you to FOMO in, right? On every move. And they just did it again. You guys who FOMO'd in, like at the top, you thought you were going to the moon again. Like everyone got super bullish. Guys, look what's happening, okay? We've been going over this for weeks and months. You should be psychologically prepared. If you can't control your emotions, I mean, get a buddy to help you out or something because you're going to get wrecked in this market. This market is designed to chop people up so that they can't buy at the bottom, so that only the billionaires and the exchanges and the VCs and all the big players can buy at the bottom while you're selling, right? I don't mean to be mean to anybody who might be experiencing that. I'm just saying that, here at Alpha Commission, I've been giving the strong warnings. And I was incredibly bullish. I was incredibly bullish over here. I was incredibly bullish over here, right? I was extremely bullish. So I'm not a bear. I mean, I'm a bear right now in terms of warnings, but I don't consider myself to be like a perma bear, right? I get bullish when things look bullish. I get bullish. This was a bull trend, and we had a chance to break up, but it failed. It failed, and so now we're going down. And there's going to be some type of relief rally of sorts. There's going to be a pity bounce. And if something in the market changes around, like in May, during the Federal Reserve's meetings in the United States for interest rates, if it's lower than what's expected, then the market may just skyrocket. If it's higher than expected, the market is going to tank. And if it's just what they expect, who knows? Maybe, we get that double interest rate and we kind of dip a little bit lower and then we find a bottom that's, kind of shallow bottom as opposed to a deep, drop. But things aren't looking good on the charts in stocks or on crypto and for interest rates. So put those things together and don't just FOMO in. Don't put all your money on the table just because of this little tiny pump for one day, right? This was an old concept that I had where price action tends to like form these kind of eggs. It's just kind of interesting to look at. It's kind of a visual interpretation. of the sections of the data. And these all pretty much aligned, right? Until they started to go on the uptrend, right? They all pretty much align. See that? Whenever it's an uptrend. And so if in a downtrend, maybe we should expect a similar thing, just flipped the other way around. And right now, I think that this one is in a downtrend. It could be the bottom of this. Like maybe it rounds up, okay? Maybe it does. But I think we're probably in this one where it's cutting across just like this one. Don't tell me, don't ask me why I think this could work. This is just for fun, guys, okay? Just for fun. And so maybe I could expect to see us like, going sideways for a little while. And then into May, a sudden drop, right? Kind of like this. Kind of like this. Right? So this one also has that angle. It's just interesting that this egg concept is just interesting. I'm not taking it too seriously. It's just interesting. And this egg lines up kind of both ways. And it's a turning point, so that's very interesting. This one could probably have aligned this way. So maybe if it does like pump up to 44,000, but you know what? It would be at the bottom of the egg, and so far we haven't seen that yet. So, Anyway, this is just a fun concept. I have no idea if this will work out at all, but if we just end up chopping sideways before a drop, like this, or maybe a pump, who knows? Then it's just something fun, right? Just something fun. We're still in this kind of diagonal. Set of diagonals down. Still up here. Could potentially break down. This was an old concept, just very old concept. This one. See how we're doing on the alpha origin channels. Very clear picture of how we're moving, right? I mean, I understand there's like rainbow bands and things like that, there's various indicators and stuff that try to attempt to put us in the logarithmic framework for price. But I like this because, when the big traders are charting things out, they're not using curved layouts. They're using straight lines on the log chart. And so by having these straight lines, yeah, the curved charts, that are kind of mathematically produced, they might get it more accurate in the long run, for sure, I believe. Most likely, because they're projections, right? But in the short run, for any like one particular set of price action, the straight lines on the log chart are going to get the big movements in local areas correct. And so that's why I created this chart. and that's why I call it the alpha, origin channel, because it comes back from what I believe is a true origin line. This is the true origin line of support where we were kind of undervalued, and then like up here we were right like overvalued, right? And this middle area is just a high value zone, a good value zone. And if we ever break back into this like a undervalued zone, then you just want to buy everything you can. And in between these two areas seems to be where the best price negotiation exists. We saw it here, kind of your last chance. We saw it here, one of the best chances to buy of your life in 2018. And then again during the Corona dump. And if we have another one, you'll want to buy in this area. Even if it wicks down, it doesn't matter. Like if you can catch this area, then you will have probably bought in the best area to buy for the next, for the rest of Bitcoin's life, for the rest of crypto's life. And so you're going to want to retain a little bit of money just in case this happens, which is approximately around the $20,000 area. Okay. If we dropped straight down today, it could be 18,000. If we kind of meander there, it could be 26, even 30,000. Even if it takes a long time, it could be 33,000 or 35,000 because this line is a diagonal upwards, right? So there's no fixed price. It's just, as time goes on, you look for this area, until price meets it. And if we do dip under it, then of course I'll buy as much as I can. And I wouldn't think that we would, break under 12,000. It just seems almost unfathomable because even the Corona dump only got to this midline. And by all the calculations, 10,000 is like the most is like the maximum that I could see Bitcoin dumping. Like in the most extreme case, I could see $10,000 mathematically. It's not what I think is likely. I just say mathematically it's possible. And so, yeah, of course I have this channel laid out. Who wouldn't want to buy there if they had that chance? It doesn't mean that we're ever going to come below this purple area. This purple area is a perfectly fine middle for Bitcoin. It's just that it probably likes to fluctuate between the purple and the blue areas, the purple and the blue channels. And then the red and the green are extremes. So we don't actually ever have to get into the red or the green again. Like maybe we just never will. Maybe we've gone from super low prices to super high prices to just kind of a nice wave, right? Of sort of diminishing returns and things like that. You don't know. This is a blow off top up here, maybe just because we started from so low. And reaching these prices may have just been, the natural kind of geometric response to this fall, this dramatic fall. And we maybe just cannot fall that low because we are not starting as high, right? These are relative areas. Of course, the price action is increasing. I think I've covered enough today. Probably don't want to just overwhelm things. Let me just go back to stocks really quick, just to see what's going on. Oops. And yeah, it looks like we're getting a rejection here, right? So that's what I feared. that we would have a rejection up here in this area, that we weren't able to reclaim this kind of golden bar in order to make this essentially a double bottom. We may be coming back here to this support, which suggests that we could eventually go lower to like 11,000 to 12,000. And we haven't lost it completely or anything. We're still above this area right here, but we're very close to losing this kind of weak support. You can see this price action here and these kind of candles and wicks. So we have like one little area left to hold us up, and it's pretty thin. Pretty thin. If this area isn't held, then most likely we're coming down pretty hard. Pretty hard. And that could just cascade everything in the coming month, right? And if the Fed adds a little bit of pressure on the market, it could just make it that much worse. They can see this chart as easily as I can, right? They can see it as easily as you can. So they know what they're doing. They're trying to cool down the economy, to fight inflation, because right now inflation is the bigger threat. The dollar is skyrocketing. Hey guys, like a lot of people are looking at this chart and they're saying, "Oh, the DXY is limited." Why is this one off? The DXY is limited by this height. Like it's most likely it's going to break down here. Yeah, there's a high likelihood that it is. But if you're looking at this chart, you're looking at the wrong chart. You're looking at the wrong chart. There's another one. Here we go. This is the DXY index. And I don't know if you've seen this one, but those are those three peaks that, oh, we can't get above it. And here's where price action has been in the past. So, the strength of the dollar has been in these areas in the past. And what do we have here? Right? We have a breakout and a retest, and then kind of a bullish setup to potentially continue upwards, maybe into the 120s, recapture this area, 120. If any of you guys think that the DXY is going to save crypto, and I'm just hearing it so much, then you're probably looking at the wrong DXY chart, because this one doesn't give you the full picture. I can understand anybody making that conclusion from this chart, right, or the various other versions of DXY, which are incomplete. But unless you're looking at the full chart of DXY, and unless you draw the diagonal that I've made here, then you're probably not really seeing the fact that we've broken out of this wedge and are now using the top of that wedge as support to potentially launch even higher. Of course we could pull back. Of course we could. Maybe this is the top. Maybe our trend is a rounded trend, right? I mean, our resistance is a rounded resistance. I don't know. It could be. This is the dollar. It's not like a typical asset, right? There's lots of things that come into play. So maybe there's something, maybe there's some type of curved resistance on the chart as opposed to this type of a line for assets that are kind of traded more heavily. But I mean, well, You can interpret this how you'd like to, but I do believe that people are kidding themselves if they think that it can't go over these, two previous peaks. Yeah, yeah, people who don't understand how things work, they may look at this and they're just going to say, okay, we're going to stop here. But look at this action right here, right? We had two peaks here, and the dollar pumped up, and then it just kept on going, right? Same thing here. People may have said, okay, we're not going to go above here, and then it came up to that level, and it maybe had a pullback, and then it just kept on going, right? People may have said it's not going to go above here, but it went there and just kept on going after having a couple peaks in front of it, right? A little bit of price action and then some strong peaks, and then going for it. A little bit of price action, couple of peaks. It's potentially, it could just go for it. Like the world may get super uneasy. The macroeconomics of the world may be getting super uneasy, and that may just push the dollar into a very strong position. But are we in a pullback zone? Yeah, we're in an area for pullback zone. Of course, we're at this like a resistance. Resistance here, resistance here, resistance here, resistance here, of course. This is a very resistance heavy area. Probably we have a little bit of pullback. Maybe kind of give something of hope to the market. But also we could just pump, right? Maybe we do get rejected and we go on a bull run and everything just ends up being ideal, right, in the world. Peace settles with Russia. Free trade opens up. China stops its COVID crackdowns, which are stopping supply chains. The Fed says zero interest rates for the next 10 years. And inflation magically disappears. Okay, then maybe the dollar just, maybe the dollar just totally retracts because everything that's been going on in the world just reverses at the same time. But more likely, it will just be a pullback, and then this thing continues to go. It's more likely, in my opinion. I mean, I have a background in, politics and, the macroeconomy. So just my instinct tells me we're headed up still on this asset, or sorry, on the DXY. Just based upon world affairs and the macroeconomics in general. But yeah, good pullback zones. Bearish divergence. Let's check out Tesla. And came right down to my line. A little bit of a bounce there. This was just a projection from back here using this wick. That just happened to cross into this price action here and here. And then I just had another one based upon this wick and the bottom of that price action. And our, descent fell right to it. Stopped right at it. Just interesting. So, it kind of shows how, these assets do want to check back on these trend lines, these diagonals. And then, of course, this diagonal corresponds to our 200 EMA, which we passed through, just eyeballing it. And Tesla is really overheated. So could it eventually come back down here? Yeah, in this case, it took its time. Just went sideways. Just went sideways. It could just go sideways. But if the rest of the market comes down, then probably it'll come down as well. Just keep a watch on it. Keep a watch on these big name stocks because how they behave this year is going to really influence the market. The big name stocks, control everything. And it's not looking good right now. Okay, so we're 39,000 again. Let's see if we can catch some support or something on Bitcoin. This is really ugly price action right here. This price action looks like the opposite of this price action, Just, it's like this price action, but going down. So these origin channels that I made, it's very interesting how it captures these wicks perfectly. Tops of this price action pretty perfectly. The bottom of last summer pretty perfectly. And these wicks pretty perfectly. I mean, I have a lot of lines here, but this is a lot of price action, so it's reasonable. If you zoom into one area, it's not that many lines. That's why I believe I'm on the right track with this. I didn't really like the origin lines that I saw on the market, on YouTube. Just it doesn't seem to really line up properly. It just seems like somebody's imagination. Don't really put much stock into that origin line stuff. Good idea, but just needed some refinement, to be honest. I think these kind of alpha origin channels be a little bit better. And if not, then time will tell. Time will tell. But so far, really good. And there's something I wanted to show you on this. This could blow your mind. You know how I'm projecting that we have this cross here? Where's the death cross, right? This death cross right over here. Pointing right there. Go ahead and turn that off. The last time we had one was right here. Go ahead and put this on. Last time we had one was right here. Okay. Let me show you the length of time. Look at this. That's why I believe that I'm on the right track with these alpha origin channels. Like I really thought out these things. Like it works. Look at this. On the same diagonal, from this test to the breakdown is this exact length. And you see this test right here? From that test to where we are right now is this length. The entire top of the price action sits on top of it. The entire top of this price action sits on top of it. If there's a place to break down, it's going to be right here. Let's put on the 3-day. Put on our EMAs. You see that? Look at this crossing right here. Look at this crossing. It's coming up. All this price action pointing into one spot. All this price action pointing to one spot. And then our 200s like coming to meet them on the 3-day. And the amount of time it took is identical. That's spooky or what? That's pretty spooky, right? But they're not, it's not just that the setup of the EMAs is identical. It's not just that the length of time, this yellow bar, is identical. It's also that it's happening precisely on the same diagonal. This one right here. Which is marked out in my origin channels. These ones that I conceived out of my own imagination, starting from back here. Which suggests to me that this area of value right here and right here could have a brother right around here. And that potentially even later on, a second chance maybe up here. Who knows? Who knows? Some type of check back, right? Back order, backfill, pardon me. These type of things. Maybe a quarterly backfill. So I hope you appreciated some of these concepts, if any of that helped you. I think we went through a lot of it just for a market overview. I hope you like my origin channels. Been working on them, trying to replace some of the kind of outdated, like origin lines that have just been floating around the YouTubes for a while. And I think this model works a lot better. All right, guys, that was your alpha for the day. Stay safe and happy trading.